Good morning. Good morning. How are you? Okay, kind of want to just get going. Kind of just want to get going. So, welcome to Forex.Today. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. Hey, my name is Wayne. Welcome to my home office. We're going to do some Forex. We might look at gold and oil and Bitcoin as well, but I'll tell you what. I am a humble servant. I am here to serve you, so you are the boss. Let me know what you want me to cover. Technical analysis, fundamental analysis, trader psychology. Hey, it all sounds exciting to me. So let's go! Bum, bum, bum. So here we are, and I have gold and silver up. Yeah, and I kind of just wanted to do this today. Just sit tight. We are. What time is it now? 9:30. So we're about 2.5 hours into gold trading hours. We're about an hour away from being done for the day. Yeah, done for the day. Yeah. Yep. So, great. Are you a bull or a bear? Are you risk on or risk off? I don't know. Let's take a look at your vote. Did you vote yet? Now we'll let that sit for a little while. What about instead of doing silver, we do WTI? Are you okay with that? You guys are probably interested in my WTI. I got knocked out for profit yesterday at $99.60, which is the annual R3. Yeah. So in at 66, out at 99.6. So in at 60, 65, out at 100, right? Yeah. And good play. Now, usually it takes longer than a week to do it, but hey, man. Again, we talked about it yesterday. That one up, I knew. R3 was the most I could ever hope for. And but the velocity and the time are like just no. There's no way I had any of that planned out. So lucky a little bit, sure. The bigger thing is now what? Yeah, now what? Well, we haven't even started our normal move for the year in oil, and yet we're already hit our most aggressive target for the year. So it's kind of weird. Like I was waiting and waiting and waiting for it to start, and just on literally the first day I started to build my basket, I was in and it was gone, and now I'm out, and like the whole year is done. The whole year is done for oil. They're like, oh my God, now what? I don't know. What do you do now? Huh? The low hanging fruit has been picked. So I'm disappointed I wasn't able to build a basket, but I'm glad I participated. And I also was happy this morning waking up. I think I got up at 4 a.m. Yeah, and checked the markets, of course, and found out that oil dropped 10% from my exit. Now, $10 on oil usually takes a week or two or three, not an evening. So I felt happy to have done what is difficult. Getting in is not difficult, I find. It's getting out, especially getting out of a winning trade. You're like, oh, but it could go another, oh my God, this can go to 150. You know what? Annual R3 is annual R3. And remember how we use our pivot points? You could get out, you should get out, you must get out. So I got out where I must get out, and it was the right decision. And I'm grateful to have had the courage and the opportunity, I suppose. So, stock market just opened. Ding, 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 ding. Okay. Look at the oil, huh? Look at the oil. We can go out to a fiver and get a whole whopping 5-minute point of view instead of 1 minute. What is your favorite time frame, guys? What between 1 minute and 1 day? What chart do you spend most of your time on? Now, the question I got here is, are we longing it again? Well, if you can tell me why, um, I'd be interested in knowing. And the next thing is, not only are we longing it again, then if you gave me a good answer, then the next question, of course, is when. Hey, Alexander, 15. Yeah. I mean, it's sort of an interesting question. Like, I do all my strategy on high time frames, but then I spend all my time on low time frames because I don't have to adjust my strategy that often if I'm a macroeconomic trader. It's very rare for macroeconomics to just suddenly change. So I think quarterly, but then I sort of plan daily. And then once I got the plan done, now I do basic technical analysis to identify prices, and then the rest of technical analysis answers the when, not at what price. You know the price. Support is support. Like what? There's nothing complicated about that. But when do you pull the trigger? Well, that's the much, the most important, right? Um, and so the closer you get to an obvious level of support, the more you can drop down into a small time frame like a 5 minute or a 1 minute even, and say, well, I plan on the 1 day, but I trade on the 1M. Yeah. Huh? The move seems to be already exhausted. I don't like the language. Huh? I don't like the language of what it's about. Let's see. Let me check my email. I know what those people are calling about. They haven't emailed me. So, anyways, uh, yeah, okay. The rationale for buying oil was very much seasonal. And then for a long time, we talked about the season for buying oil happening earlier this year than most years out of geopolitical risk around Iran. Now, it was just tensions at the time. There was no, I had no alpha to say we're going to attack, there's going to be a war. No. But we do know seasonal, and we did hit a price of 50, and then Aiden, TRADARS AI, did turn bullish in the middle of January, guys. January. Yeah. And so I'm like, well, why is it turning bullish earlier? Well, we did hit a psych level, and now we got some tensions going on. Okay, well, maybe it's early this year. And that's, that was sort of the logic. And then it started to go up fine. But again, we could have been buying higher lows back in January and February and been well established long with stops going into March. Great. And then, like what actually happened to me, boom! It went up. Holy schnicker schnucker. Yeah, well, that wasn't the plan, but this is why stops are used. If it went against me, I would have been out, and I would have just tried again. But in this case, it went up. Great. So what was the catalyst? It was the actual attack. Okay. Now, this idea of already exhausted, that's not how you should be thinking. Like, dude, it can go up, it can go down. It's not exhausted. I don't know. I just don't like the response. No offense. Right. I'm not picking on you. What I'm drilling to is give me rationale, give me logic, give me data. And it's like, we know the next big spike where we didn't just go from 70 to 80. Like on that first day, I was in at 66. The next day it was like 76. Okay. It went up $10. So then the next thing is, if bombs dropping will do that, what got us to 120? Oh, well, we attacked oil infrastructure. Boom! Okay. We go from 80 to 120. Okay, great. Now what? So what is the thing that would push oil back up is what we're talking about, right? Give me a real catalyst. Well, if attacks on oil infrastructure, in this case, the U.S. and Iran attacked an oil refinery near Tehran, and it obviously refineries have storage facilities, so all that went up in flames too. What is the likelihood that something like that occurs again? Or some other situation in the Gulf of Hormuz that is more than what we already know. So there's real damage. A ship is actually attacked, or a U.S. ship runs into an Iranian mine or something, and you're like, oh my God, right? So we need that catalyst. Okay. Yeah, but see, FOMO, I don't like that. That's not how you trade. And most people lose money based on, stupid things like that. So for those that trade oil, what I've been trying to show and say is that we've had oil data going back to the beginning of the year and going back 20 years of data, week over week, month over month, going back 20 years. Institutional investors know, generally speaking, when oil prices go up, when they fade, when they go up again, and when they fade again. Generally speaking, we don't know what day, but generally the logic is there. And then, right? And they also are good at getting out. So those that fear instead of have logic, okay, miss the up move, then they buy everything high. And then what did I do yesterday at $100 a barrel? I got out. And so now others might be like, oh my God, now it's going to go to 200. It's going to go to 300. I better buy it way up here. Well, that's not logic or intelligence-based methodology, right? And so getting in before it happened was more logical because we have historic data. Again, didn't know there was going to be an attack on Iran, but up is up. I didn't create the velocity, but the trade is the trade. Then getting out at yearly R3, like what was your plan if you didn't get out at the annual R3? That's what it's there for. Our rules of engagement is you must. So, out. Now, a lot of people, again, institutional traders that have around-the-clock offices and stuff, got taken out even above R3. But they knew to get out. Meanwhile, this is where retailers buy at 120 and it goes to 110, so they buy more, and then it goes to 100 and they buy more, then it goes to 90 and they buy more, now it goes to 80 and they buy more. Now they lose their shirt, bail out on the trade, right? And then institutions maybe buy it back, jam a stop, and say, well, I don't really know if it's going to go back up, but what is the probability that there's another situation in the Strait of Hormuz or on anyone's oil refinery, whether it's Saudi Arabia or Iran? Doesn't matter whom attacks whom. If oil supplies are considered to be threatened or even offline, that's the only thing that's going to take WTI to $150 to $200 a barrel. But to do it willy-nilly makes no sense. And so that's where you got to have the data. And the interesting thing is the big move of the year wasn't supposed to happen this early. Normally I'd still be preparing. Okay. So is there going to be a next wave? Again, I don't know. But the technical, logical, mathematical implied volatility for oil this year has been accomplished. This year is already done. The projected high has been hit. Done. So are we going to go again? Maybe. But it's too early for it to normally occur. So what we are in a situation of now is the probability of a risk generated catalyst. So President Trump says the war is not going to be very long. Boom. Stock market rallies. Oil comes down. Great. Okay. Great. But what about the other side? Yeah. Do they attack? Does Iran attack somewhere and cause oil prices go back up? I believe, and this is now my speculation. I am a speculator. I don't like to trade that way, but here's what I am thinking. Trump wants oil prices to be low. He wants the war to be over quickly. He wants to get Iranian oil on the market. He wants to get Russian oil on the market. He wants to get Venezuelan oil on the market. He wants those prices to come down. He wants gasoline prices to come down. He wants CPI, PCE to come down. He wants Fed funds rates to come down. So you got to be cautious to say you're going to trade against the administration. But yet there is a chance of risk. So I wouldn't play it like I have a fear of missing out. No, I think we should be very strategic and logical and find really good prices, very good timing, use the data, watch risk analysis. If you're sloppy, you're going to get run over. Okay. So, are you a bull or a bear on gold? I bought gold yesterday. So, I own a decent amount of gold. I think I've been buying it since 4,200 and we're at 5,200. Okay. I got this on a little Fiverr. This is a zero lag 21 EMA. So it's not a leading indicator, but it's not a lagging indicator either. It's only a 5-minute chart, so it's scalping, but the way that you do this is you should already know if you're a bull or a bear. Since I just told you I bought it yesterday, I must be a bull. I don't know. Figure it out. Okay? So what would a bull do in this situation? Now, I'm only looking at it from a bullish point of view. You should, therefore, look at higher time frames and different setups to say, well, what would a bear do? This might be a great bearish setup, but bulls look at this as consolidation, breakout, pullback, and now we're looking for a long and gone. Okay? So like I was saying before, price is obvious. Plan B and plan A. Those are the prices we're interested in. 5,200 or 51.50, roughly speaking. So if you're a bull, somewhere in here, you should be thinking, now should I buy? Drop even down into a smaller time frame. We were talking about this earlier. I know the price in which I might consider buying if I'm a bull. I know I'm a bull, so finding the price should be easy. So now we get near the first closest price. The next thing is now I can drop into a 1 minute. What time? What time? Now? Do I buy it now? Do I buy it now? Do I use a moving average crossover? I don't have two moving averages on this setup. Do I use an oscillator? I don't have an oscillator, but if I did, I'd use a stochastics. I could use price action. Well, I don't have a higher high, higher low. You see this? Right now it's showing continuation down. So I could wait for this to say continuation up. Cool. Now I got my trigger. Got my hands in my pocket, got my finger on the trigger. Huh? What do you think? You like it? So now you can just sit here and make a decision. Higher high, higher low. Higher high, higher low. Or maybe you say, I got to get a green continuation. Or maybe you say, I got to get above the zero lag 1 minute 21 zero lag. Or maybe you want to see a positive integer on the slope. Okay? And you should think of it as like, how should I draw this? Let's start by drawing a light gray line. I would say here and here. Okay. And here. All right. Then you go here, and then you go here. All right. So right now this is bearish. So, hey, bears, guess what? In the future, now you're selling a higher high on this time frame, but it might be a lower high on a 1 hour, 4 hour, or daily. So don't get all on me. You need to know if you're a bull or a bear. This chart will not explain it to you. But if you're like, hey, that's a 4 hour moving average, or that's a daily roll reversal, you make a decision, that might be very, very bearish. So this is your best case, base case, and your worst case scenarios. Cool. Bulls kind of want to do something similar, right? So you might have to wait a whole hour, my friend, okay, to get something similar where suddenly my price action pivot points, which is what this is, are pointing this way. Okay. Or you just go ahead and you buy it here because it made a higher high, higher low, and that's good enough for you because you want to buy it off support. You've already made the decision. We already talked about this being a roll reversal, so you're like, dude, long and strong. Okay, but you know what I'd still rather get above the 21, then catch a pullback. Okay, I don't need every possible pip to feel good about myself. That's not the point. What makes me feel good is that not that I entered perfectly here. What makes me happy, if you will, for those with emotions, I'll use the word happy. What makes me happy is that I can stay in this trade for 6 months and make, a huge return. And if so, buying here, or buying here on a 1 minute chart is completely, totally irrelevant. The value is I know that I'm buying gold on a medium to long-term basis. That's the alpha. Not here or here or here. Who gives two hoots? I bought it at 52. I bought it at 52.12. Oh, well, you suck. Really? Yeah. Really? Hey, I could use a couple more votes. If you haven't voted, please vote. I'd like to get more votes just to make sure that it's as statistically accurate as can be. Okay, so this is where bears would sell. Look, we have it. And by the way, no, I'm not talking both ways. Right now, this chart is set for bearish continuation. Price is below the zero lag moving average. The mean is a negative integer. Okay, so that's that. It is factual. What bulls, and this is why I was talking about it, bulls really want to see a break of this, and instead of a bearish continuation, you get instead of a red continuation, you get a green, which is really just a role reversal. So really what happens is we break this, and that zone becomes bullish in the future. Right? That's how the Wayne do. Yeah. Ha! Look at that. It looks like a definite maybe. Hey, can I get a hallelujah? Hallelujah. Okay. Boop, 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 boop. Sand rains down, and here I am, holding red flowers in a tomb. All right, well, go ahead and answer the score. The risk. We are risk off, pulling a four handle. -4. Not quite, but getting there. Risk off to strong risk off. Okay. VIX is down. That's risk on. Bitcoin hanging in there, back above 70. That's risk on. Gold, look at that. Gold up. Oil down. Yeah. Dollar down. Yields. So it's still not great. The market conditions are still not great, but have improved quite a bit. Let's get an update on headlines.
U.S. dollar Swiss franc technicals. The U.S. dollar Swiss franc tilted the bias back to the downside late yesterday. Gold, tepid flows despite geopolitical shock. TD Securities. Germany's Merz sees no plan for bringing Iran war to swift end.
Gold rises to a one-week high as it jumps after breaking $5,200. Reducing Europe's nuclear energy sector was strategic mistake, EU chief says. Swiss franc, SNB watches currency as inflation stays near zero, Nomura. Gold rises above $5,200 as softer U.S. dollar and yields offer support. U.S. dollar, conditional haven, limited durability, TD securities. Thank you, Toronto Dominion. Just kind of go here. See, we still have a macroeconomic outlook that is bullish for oil. What's not inside of that is that we've accomplished all our goals already. So I'm not sure how Aiden will deal with this. I'm going to have conversations with him about, okay, we've hit our targets, but not macro, but geopolitically driven. Now what? Yeah, that gets very interesting. Yeah, I know, Dennis. Hang on. I'm going to have a solution for you. Hang on, Dennis. There's a few others that are trying to join as well. I got space for you, brother, but just not right this second. Hang on. By the end of the week, okay, you'll be on the team. Bitcoin up as expected, Ethereum up, copper up, all these things up here are up and expected. Everything over here is down and expected. It's this stuff that's out of whack. Yeah. So these are maybe sells and these are maybe buys, huh? Yeah. Right on. Thank you for your patience and your loyalty. So I don't know if you've been watching this. Some of these are not actually listing correctly, but you should be able to read a chart. Okay. So what do we got here? 4-hour charts, monthly pivot. You should be a bull on Aussie. We have been for a very long time. Since the beginning of the year, I think, if I were to guess. Our targets are in play. Bias, bullish, trend, bullish, chart, bullish. Okay? Bias, bullish, trend, bullish, chart, bullish. Bias, bullish, trend, I can see slightly bullish or neutral. And the chart, I don't know. That doesn't, I think that may be slightly off. So I'm going to have to look at that. Because if the way because remember, I taught Aiden, so Aiden's drawing this, and I'm like, Aiden, I don't know if you're doing that right. The trend is close. Okay, we're not looking at the chart for that trend. We're looking at the trend radar, so I'd have to verify that. Maybe there's a price error over there. chart neutral? Well, the 21 is above the 55 and seems to be not contracting. So either this is supposed to be bullish or it's two shakes of a lamb's tail from becoming bullish. So we got to be careful there. Bias bullish, but CAD got really strong on the oil move, right? So the trend is neutral and the chart is neutral, and I do agree with that. Okay, good. So pass. Setup neutral. Kiwi dollar, bias bullish, trend neutral, chart neutral, but that chart is definitely not neutral. That's what makes me question this other one. This is definitely bullish, and the trend I would suppose would be bullish. That's Aussie Kiwi, so we can check that really quickly. Oh, I wonder if that's what it is. He doesn't have a crosspair? Sound like Norm Macdonald. That's the glitch. Ha! Found it. That's what's going on. He doesn't have, he meaning Aiden. He doesn't have the trend data for this, that, and the other. So he's just like, neutral? Yeah. So I'm going to have to create that. Yeah. But anywho, and then why is he not drawing the pivot points? I don't know. But anyways, it looks, so we're fundamentally neutral on this. That I also find hard to believe. Really? So I got to check these things like Euro, Aussie. Really? Let's double check. I'm creating something called these little cheat sheets here. Euro, what was it? Euro and Aussie are the same? Really? Euro is a 4, Aussie is a 6, so that's not right. So I'll have to figure out what he's doing. Big float, you see that? Big positive bullish sentiment on the Aussie dollar. There was some negative flow out of that, but the market is definitely long. Institutional investors are definitely long the Aussie. Definitely. There's no doubt. In fact, it's the best thing. So maybe he's not doing this quite right. He's like, well, this is long and this is long, so they're the same, neutral. No, 20% and 3% are not the same, right? So anyway, so I'm still working on this to get it better, but I think this is how it's going to turn out, and then we're going to be able to analyze it in different ways. And I put that kind of stuff on the back burner. So the idea here is in the background, Aiden will be doing this in his brain. So for the bias, for example, should euro dollar go up? Let's say Aussie dollar. Aussie dollar versus US dollar, right? Should it go up or down? Well, compare Australia versus the United States by looking at interest rate differentials, inflation differentials, okay, GDP up here, sorry, the trade balance and how it impacts them. So, okay, like our trade balance, our meaning the United States, is different from the trade balance in Australia. Australia is supposed to have a positive number. The United States is supposed to have a negative number. But that's really what Forex is about. I haven't analyzed it, but let's just say in theory, you could just make a very basic assumption about how to trade Forex. You guys ready for some crazy alpha? Okay. Money is flowing to Australia and out of the United States. Don't worry about why, but we have the data. So what happens if money flows out of the U.S. and into Australia? Out, in. What happens to the Aussie dollar? Okay. Out to in. Is that up or down? Okay. That's economic logic. Now, if you want to do institutional quantitative analysis of the flow on Aussie and dollar, you would look at money leaving US dollar in institutional holdings and going into institutional holdings. So institutional investors, which include asset managers, hedge funds, pension funds, insurance companies, all these different things, they are selling the dollar and buying the Aussie dollar, right, in the futures market. But also the economy in of itself, which is a totally different quantitative data set. More money leaves the United States than enters as a measure of X minus M. And over here, X minus M is positive. So more money goes to Australia, which means money is flowing this way. Dude, come on, give me some love. Was that good? You can track this now. You can track this now, huh? So that trade would be logical. Now, there's other things going on in the world, like geopolitical risk with the war and all that kind of stuff. So dollar could get strong, but it wouldn't normally in a scenario like that. Okay. Look at the trade balance in Japan. It looks wrong, but it's probably right. It's shocking, right? You're like, how's Australia? 3. How's Japan? 300. Yeah. Which tells you if you're in Japan, it would be very difficult to buy a used Volvo. They don't have it. Yeah. What they do import, though, is oil, oil, oil. Yeah. Oil, 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 oil. Oi, oi, oi. Richard, a response to your email? Yeah, I'm sorry. I don't remember. Do it again. I'm sorry, Richard. Wayne at FX. No, Wayne at TRADARS.com. I'm sorry, man. I don't know what it is. Yeah. Yeah, by the way, I'm working on an idea in my brain to build you a probability tool. Not so like when we look at this yield curve, right? We know the yield, we can derive the flow, and from that we can assume, I guess, what would lead investors to trade this way. Are they risk on or are they risk off? Do they expect the Fed to raise interest rates or hold interest rates? And in general, right, by way it flows. But then you can look at other things and like, what does this mean? Like, why does this dip exist? It didn't exist 2 days ago. What would that mean for the market anticipating the first Fed cut? Is it going to be March? No. Is it going to be June? No. Is it going to be September? Ooh. Maybe. Okay. Um, and so I thought, since we have millions of data points now, can we start to predict all kinds of things inside? A lot more AI kind of stuff, right? Based on the way people are positioning their money. What bets are they putting on? And I think we have enough data now to be able to do some of that. Right? So imagine I could hover over here. It'd be a different page, but imagine I could hover over here and it shows the current yield 30 days ago. Sorry, the current yield and the yield 30 days ago. So we know the yield is lower. We also know money went in because it's the way that you make yields lower. But what if you could put your mouse here and say there's a 28% chance of two cuts by the Fed by that time, a 61% chance of only one cut, and 12% of no cut. And I don't know if that added up or not. I wasn't calculating. But that we could calculate it by this positioning or other positioning, and then derive the percent probability, and then of course track the changes. So every day those are changes. You're like, oh my God, they're pricing in one extra cut because because the probability is moving from one cut to two cut. You can see the increase, and imagine it was all graphed and charted out and stuff like that. You're like, oh my God, two cuts are starting to happen, and that flow, and that's why the dollar is weak, and that's why the stock market is up, and we're able to track all of that and chart it and see the changes in market sentiment based on money flow. I think that'd be cool, right? Like, for example, we could have a measure of the next three meetings. Is it pause, 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 cut, pause, pause, cut, cut, pause, cut, 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 pause, cut, pause, 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 cut, pause, cut, cut, and have the mathematical probabilities and then track how they're changing. So we can calculate how many cuts, but when the cut, and then the change in that sentiment. I don't know if I'm taking this too far. I'm sorry. But it occurred to me, we with the data we have now, we can do some fun things. Okay. Because you're like, Wayne, why don't you? That's cool, but why don't you just tell me what to do? Like, dude, you already have all of this. Bullish, bullish, bullish. What do you think? What do you think? What do you think the plan is? How about this? All right, very bullish, bullish, very bullish. I don't know. What do you think the plan is? Wayne, just tell me. I think that does tell you. If I may be so bold. Boo, 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 boo. You guys are quiet today. Are you all right? I mean, we can just go back. Look at our plan A, guys. Look at our plan A. All right. Well, we can just go back to our squawk box if you want.
Knock. Recent strength seen as temporary, Nordea. U.S. February, existing home sales 4.0 numbers, 3.8 number expected.
United States existing home sales, MOM, came in at 409 M, above expectations, 3.89 me in February. United States existing home sales change, MOM, climbed from previous 8.4% to 1.7% in February.
U.S. dollar, Canadian dollar. Consolidation holds with firm support. Scotiabank. Hungary inflation eases to 1.4%, lowest since November 2016. U.S. dollar Swiss franc technicals. The U.S. dollar Swiss franc tilted the bias back to the downside late yesterday. Gold, tepid flows despite geopolitical shock. TD Securities. EC Markets International Women's Day panel with Liverpool FC women at AXA Melwood.
Yeah, this could be a buy a dip now, huh? I'm looking at here to here is more than a 786 of here.
Australian dollar, US dollar, high beta outperformer on exports in China, ING.
So if you were going to scalp, it would look like this now, huh? Let's check the 5 minute. Yeah, the 5 minute is just beautiful, all right? Look at that. Up, 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 down, down, roll reversal. Pachow! Pachow! Go just Mhm. Yeah, just really nice. Consolidation, up, down. Go back a little further. I bought it yesterday around noon. So it would have been a buy in here. And not on my Trader's Way account, but in my retirement account. So I added more to it. And yeah. So to see it, you know, so the way that, I mean, obviously that's going to influence the way I read it. So up, consolidate, up, consolidate, up, consolidate. Okay. What do you think? Down in Asia? That's what we call an Asia fade. So that would just make me want to buy it. Okay. For later. And why is that? Well, because I'm a bull. Let's take a look around the world. Let's check the US stock market. Little kick off the daily 21 back to where we were. Back inside, we'll call it a range. Fine, 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 fine. Dow's getting hurt quite a bit because it's a multinational um, index, and it would be hurt the most by falling global GDP. Looks like we got that one pegged out here. I think I'd want to check this level, and I guess that's kind of where we are now. Want to get above that before I buy some more. I own some Dow. I own a lot of NASI, and I own even more S&P. But NASI is just caught here. Right? Yeah. By the way, this is a zero lag indicator. Not a zero lag indicator. It's a zigzag indicator used by Elliott Wave folks. I'm just looking at it to confirm sort of price action in a very general way. You can adjust the settings to give it more sensitivity, but whatever. So the thing is, technically, it's bearish. I do want to buy it. I'm not sure if I want to buy it now, but I want to buy it soon. But it's technically bearish. And so that's what makes it pretty easy for me. Like, oh no, a fear of missing out. Well, I do want to buy it. I just can't buy it now. I'm not allowed to. That the chart says not to. Yeah. So I have to wait. Now, I could have bought it here, but that's risky. Well, I don't like risk. I'm risk averse. And you're like, Wayne, I like your scalping tool. Okay, well, why don't we throw that down on a daily? What? shut the back door on a daily. Yeah. So is that bullish? No. But it's a lot less bearish than it used to be. You see? And so maybe that's the beginning of something beautiful, but statistically, this is sideways. And when we look at things seasonally, we do want this to go up, but it usually doesn't start until closer to April. Meaning it could do one of these things. So this is daily. So let's say it goes up a couple of weeks and everything's good. And then it comes back down. And then when there's no hope for this to return and everyone is certain
Pound energy shock
it's all
in
over,
politics way. Rabobank.
that ends up being a buy and hold. Hold to July 1st, which is Canada Day, or hold to the end of the year and get out before taxes are due, or hold it forever. And forever usually means forever. Now, yesterday, my Council of Investment Advisors, we dumped our Russell 2000 position for 16% profit and rotated that to a new position, just rotated it out of that, because we entered that trade when we figured the Fed was going to start cutting interest rates. And now the risk is, well, with the war, even with wars coming in, it might be difficult, maybe impossible. We don't know at this time. We don't know 6 months from now. We don't know 9 months from now. We can guess, we can speculate, but what we know for sure is we don't know because of geopolitics. So we're like, well, a likely but bad situation would be the Fed can't cut. And who does that hurt the most when you look at the Russell, the Dow, the S&P 500, and NASDAQ? It hurts the Russell. So if they're going to cut less or not at all, that would likely be the worst performer in the future. So we're like, we don't
South
like
African GDP expands 0.4 in Q4.
Markets react to crude oil price crash.
So if oil was to stay high for a couple of months or longer, it's possible. And if it did, who would it hurt the most? Small businesses, right? Small caps, Dow, S&P, NASI. Well, it hurt the Russell and decided what to do. So, yeah, we got it out of that position and rotated, rebalanced. What a cool meeting. So now it doesn't matter what Russell does. I don't care. The thing is that the perceived risk went up, and we're like, yeah, well, we got to address the perceived risk. Whether it comes to fruition or not is irrelevant. Risk is risk. So that was nice. That was a very good conversation. So how about the NASI on a 1 minute? Look at the break here and the continuation. Right? You see that? Break, pull back. Nice, right? To have it all labeled and everything. Okay, new support. Swing low, sweet chariot. This is only measuring price action, by the way. We don't have pivot points and all that on there to give you a predictive top and bottom, for your implied volatility. But you should already know that. It should already be on your charts. We're just measuring price action. Another way, you could call it scalping. Yeah. $10.36. This is the last swing to the London close. So again, what you should be eyeballing here is this little zone. And an entry could have been here off the continuation line. I'll put the shift back. I was trying to get the text to the forefront, but I wonder if I can also, does this mean? No, don't like that. So at some point, the zero lag moving average just represents one standard deviation, which we already see with the price action pivot points. all of a sudden, like, well, do you actually need that moving average? I don't know. Maybe you figure, I don't know. I don't know what you figure. Yeah, Oscar Mike. On the move. We're back to the opening price. Yeah, going back to gold and silver. So we got our pullback that I designed for you. So the thing is, are we going to get follow through? Well, that I don't know. Well, okay. But we got the pullback. There's the pullback. Not bad for a 1 minute chart. Definitely stalled out on the 1 minute though. And it's saying, look, this has a high potential for a lower high and then a crash from here. All right, well, that would take you out right at break even, right? Or take your stop out. I mean, that's why you use stop losses. But we'll see. We'll see if we can get some follow through today on the open. Stock market up could be a risk on move and all that kind of stuff. But
Oil. Straight risks and reserves shape outlook. Commerzbank.
global efforts underway to stabilize oil market, says France. Yeah, and so if oil prices come down, that's good for the stock market. And maybe that's less strength through the U.S. dollar. And I don't know. Gold has been benign recently, which is good. I mean, you want that for a safe haven. I mean, you don't want volatility in your safe haven. It's not a safe haven. Yeah. Zip over to WTI, and see, that's good, huh? I got out at $99.60. Come on now. Yeah. Cool, man. I mean, we got to check the pivots on this sucker, right? Let's do Confluence. So that's monthly, isn't it? I don't know. It's hard. Guess we'll go back to yearly. See that 99.6? So that's where I got up. Cool. So now we're down here. 82 is the annual M4. That was our conservative projected high back in January. I think by middle of January, we were projecting 84. So now that we're kind of basically there, right? Last night, Meta, yes, but I'm destroying all of that, the system. It's just not working. So I would just say don't mess with it and wait for me to rebuild everything by Monday. I mean, yeah, I'm going nuclear here and just blowing the whole stupid thing up. Yeah. But we're going back to using the old system that works. Yeah. Yeah. So I'm just in the process of integrating all of that. Yeah. So thank you. Thank you. U.S. existing home sales unexpectedly rebound in February. Still pointing down, huh? Remember, if we were going to have projections, we'd be projecting worst case, best case, right? In fact, I guess I can, instead of doing it this way, I can draw it with the triangle. Okay. We'll call this where we are, and worst case, best case. And I guess you would have to then draw from here to here being base. So that's our projection. That's roughly the math that we use on TRADARS for our projection. Not quite, but not far off. Simplified version. If you have a request on an asset, you let me know.
Tech giants fluctuate, industrials gain, analyzing today's stock market movement.
Yeah, well, we're approaching our target. Standard swing trade. Target is 113. We could probably get to 140.
ECB. Conflict-driven energy shock shapes rate path. Nomura.
So the bullish trade plan, and we've been bullish on this for a while, like months. This actually projects that. It doesn't say 114. It says 112.76, and we're practically there. So that's all I could really tell you, Meta, that we're basically hitting target, and we should expect profit taking between 113 and 114. Is it 113 and a 113.39? Sorry, 113.40. So 112.7, 112.80, and 113.40. Yeah, especially rolling into London, you'd have to assume the London folks, the London boys. Okay, they're about to make a decision. They have about 40 minutes left in their day. Well, you could, but that would be closer to the. I mean, you could. I don't know the future, but if I were to do that, there would be two scenarios: closer to the New York close than the London close, or that's exactly what the Asia fade would be, right? But like yesterday's Asia fade was this. The drop into London, right? So that's our day trade.
Australian dollar US dollar extends rally on strong Australian yields, soft US dollar. Crude oil is lower, and the sellers are taking back control technically.
Yeah, happens. I mean, we can identify it from a day trade point of view, right? So, template, day trading bullish bias, and yeah. Yep. Yep. Makes sense. I mean, right? You'd have to be
Note:
using that
inflation surprise
zone here.
challenges rate cut pricing. BBH.
There's also like this fine line of like, is it pivot points or is it moving averages? And the answer to that is yes. They're both trying to do the same thing. Okay? I used to have something called Fibbits. It would do that. So it's all the same thing, right? Yeah. And remember how we were approaching the weekly target? Check this out. Right? A 382 predicts a 1618, and we just hit the 1618. And check this out. It's the daily aggressive target at 1270. So, like, this day trade is done. There might be some, I don't know, scrap meat on there, but it's by and large done. Right. Done. That's it. Now, it could go higher, of course, and we saw that. It could go up another 50 pips. But based on implied volatility on the daily time frame, that's not probable. It's possible, but not probable. And so the next 12 hours is about setting up tomorrow. Yeah. And currently that's going to be like a retracement back down below 12, but no more than a drop than here. So I'm already thinking about tomorrow. Okay. I'm going to put tomorrow off of that. There we go. So my tomorrow plan, still pretty vague. Now I have tomorrow's pivot points already drawn. Now they're going to adjust because they're not set in stone. Can't grab that. I'm trying to catch that. There. So I'm going to look at it like this. I know it's a big zone, but that's how I'm going to look at it because I don't know how the rest of the day is going to work out. But today's plan is dead, and tomorrow's plan is roughly there. Sort of this 112.11 to 111.71 area, which is kind of interesting. I'm like, I'm not even sure what's drawing that, but that's interesting. I'm like, yeah, you know what? That could work. Good enough. Yeah. It's nice to have it all labeled in advance, right? Oh, I think my internet connection just died.
How strong is too strong for the Swiss franc?
Yeah, I guess it's hanging in there. So, target achieved. Mission accomplished, everybody. Right on the London Open, typical Asia fade, classic trade. Yeah, well, pick a pair, any pair. So we're just still, here's the monthly targets, and then there's the yearly target. Long ways to go. Bank of England's probably going to cut, but not by much. But H2 producer, let me know. Give me a pair. Give me a time frame. Well, if H2O producer doesn't have a pair, then I'll show you one that we covered earlier today at TRADARS. And I believe it was Euro Aussie, wasn't it? So our target is 161.81. Okay, trending beautifully. So let's do basic price action. First of all, this is the moment in time which technically it became bearish, not an opinion. And that was the end of last year. The end of last year! Hey, scalpers, listen up. Down, 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 up, up, sell. Down, 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 up, up, sell. Down, 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 up, sell. Down, 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 down. You have to decide what you think might happen next. But this move has been happening for 3 months, 3.5 months, almost 4 months. Basic price action, or just basic sell off the moving averages.
1, 2, 3, 4, 5, 6, 7, 8 pullbacks in 12 weeks. So basically, swing trades. Swing, 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 swing. Now, you have to understand the macroeconomics of Europe and the macroeconomics of Australia. And my guess is you're already a good technical trader. You just don't know what you're doing. If you're just waking up to the fact that Aussie dollar is strong. Oh, really? They're raising interest rates. What about Europe? They're paused. Oh. Well, that's just straight up macroeconomics, isn't it? Yeah. So the rest is just technical analysis, which is the easiest part. All you had to do was be a bear and sell the moving averages on a 4-hour, which is basic swing trading. Yeah. Like an Asia fade, but on a higher time frame. Yeah. Cool, right? Yeah, very cool. Super cool. Unbelievably awesome. Well, this is the only way to trade that I know of. And if you watch my YouTube videos from 20 years ago, this is exactly the same way I was trading 20 years ago. Yeah. Noise! Have a great day.